Well, my involvement with the social investment space and social finance began about 5 years ago at JP Morgan when the bank decided to start a social finance group, and I was asked to supervise it. And at that time, we hadn't even heard of the term impact investing. Since that time, I think there's been an extraordinary amount of momentum behind this idea that you can actually combine these two, often quite, or what many people would consider to be quite different objectives of creating positive social impact as well as earning some form of financial return. And so I heard the Aga Khan recently described this impact investing as the most important movement in finance for the last 50 years. And I think when you, that may be overstating the case a little bit, but when you think about it, when you look at what's happening, both particularly here in the UK, but also in countries like Australia and Canada and Israel and a whole host of others, what's happening on the continent in the EU, I mean, there really is an enormous amount of momentum behind this, this idea.
It really has been a pretty amazing journey, actually, I think, from where things were when we started 10 years ago. We've just celebrated our 10th anniversary. To, I think, something particularly over the last 2 or 3 years that feels as though it really is becoming part of, perhaps not mainstream, but a really material part of the economy, something that the government is very much focused on, and all deliverers, social sector organisations are genuinely engaging with.
For years, charities and social enterprises have been telling governments of different colours, look, we could do more, but we're finding it really hard to access long-term affordable finance from mainstream financial institutions because they don't get us, they don't understand our risks. And so social investment is a movement, a market that has grown up over a number of years to try and meet that need.
The enabling environment that we have now in the UK marketplace is as best as we've ever got. We've got a wholesale bank, we've got a government that's looking at changing legislation, we've got investment readiness programs, we've got new entrants coming into the markets, new funds. So I think we're at a really pivotal point. What the market needs to deliver is some track record of successful investments and exits. It needs investees that are coming forward with investable opportunities.
I think we've reached a real inflection point. I think we've seen that day to day. We've seen our pipeline even in the last 6 months is probably stronger than it's ever been. We're seeing a real growth of social enterprises, both in terms of new organisations coming into the sector and in existing organisations really growing and innovating.
2012 genuinely does feel like a bit of a watershed, and it hasn't felt like that every year. We have had periods where it felt like we're really sort of pushing against the stream at times, but I think 2012 with the launch, I suppose the launch to Big Society Capital earlier in the year does mark, I think, a material change. It's quite a step up in obviously the availability of capital, but it also, I think, has marked a real change in the engagement of government in trying to support this sector to become in particular a major provider of public sector services.
Ambitious About Autism is the national charity for children and young people with autism. We provide services for them like Treehouse School and Post-19 services. We try and increase awareness and understanding about autism, and we try and influence the rapidly changing policy environment.
Bootstrap Company is a local charity and development trust. We're based in Dalston and we provide affordable workspace for the local area. We have 3 buildings that we manage at the moment, the Print House, the Colourworks building and Fitzroy House. In addition to that, we also have a few event spaces like the Print House Gallery, Dalston Roof Park and also a World War II bunker in our car park space.
The best way of describing the services that Cambridge House delivers, all services are aimed at addressing the effects of poverty or the influences of poverty. So whether it's from a legal centre and the one end of the building to work with people with learning disabilities or youth work, it's a wide spectrum of services primarily aimed at the more disadvantaged part of community and within a local area.
Well, with social investment, organisations like ourselves can bring a project which is early, which is in its very, very innovative stage, and actually leveraging funding from people who actually understand this field and who actually can see the potential. and they can help us to actually develop the sort of business plan that will attract other finance. And so social investment is really important to organisations like us who are innovating for the future of this country.
Initially, we received an investment of 330k, that was in 2008, which was to reshuffle and remortgage our building. And then over the years since then, we received additional support to run our Dalston Roof Park project, and we also received advice, business support, legal advice.
The entire investment from social investment business was for the refurbishment of our well outdated premises. So we managed to turn an old, not fit for purpose facility into a modern, fit for purpose, completely accessible facility for a local neighbourhood that they can be proud of.
I think the SIB Group and others like them have done a fantastic job over the years, and some pioneers really, breaking the rocks in terms of establishing the credibility of social investment, establishing the credibility, for example, that you can lend to charities and social enterprises and get your money back, encouraging charities and social enterprises and their trustees to think about taking on loans or thinking about taking on investment in creative ways. New movements always need leadership, and SIB and others have performed a heroic role in that context.
So if you look at the UK infrastructure in particular, we have the wholesaler with big society capital coming into the marketplace. We have the existing funders out there. There's ourselves with the venture capital fund, community builders, future builders, and Department of Health fund. We've got Bridges Ventures. We've got Big Issue Invest. We've got the new entrants coming in with Berenberg, Nesta's Impact Fund, and City of London Corporation coming in. We have the whole intermediary layer as well with social finance, clearly so, and others coming into that space.
The UK is genuinely positioned as one of the leaders in the sector here, and we are seeing real interest from both European investors, from US investors, who are engaging with the growth of the sector, not just for potential investment opportunities, but for learning.
I think in the next 10 years we're going to see some new and interesting developments across the social investment space. In particular, I think we're going to get much better at trying to understand and evaluate what social impact is as part of an investment deal. We're going to start to see a great deal more understanding in the market from potential investors as to what this actual area can deliver, and not just a kind of vague understanding that there'll be a bit of investment and maybe a bit of social impact. I also think an interesting development is people starting to understand that social enterprises are investable organisations. They're not something that many people feel at the moment still, that an organisation feels a bit sort of nervous about investing in a social enterprise because, well, they're doing a social mission, so that's sort of incongruent with an investment decision. But I can see people becoming much more clear about the fact that the two can go hand in hand, and that's going to be an important thing we need to develop and tackle over the next 5 to 10 years.
I think we're at a very critical point now, and I say critical because on the one hand I think we are beginning to see real money flow into the sector. So transactions, if I went back 3 or 4 years ago, it was very difficult to really identify impact investments, social investments that were actually happening. Now I think it's much easier, and there's a much more of a flow of transactions. So I think the next 5 years will be critical in terms of illustrating through real transactions that we can actually provide some security of principle and financial return for investors, and at the same time create this positive social impact.
So I see 3 things happening over the next 10 years, and they're all relatively interlinked, I think. One is this whole concept of socially useful finance. So how do mainstream financial organisations embed social considerations into their investment decision-making processes? Secondly, I see growth in sort of new business models. You see that in ethical consumerism, fair trade, in supply chain finance, where corporates are looking to charities and social enterprises in terms of their supply chain. And then finally, I think even in terms of the government approach to outcomes-based financing, and how do we link that with real changes and remodelling of public services. The social sector is in a prime position to use the evidence that they have in terms of social outcomes linked to the provision of services and revenue streams. So I think the next 10 years I'm hoping will be very, very good for the social sector.
Oh, I think the government's aspirations for this market are very big. I've said, we've created the world's first social investment institution. We're doing a lot of work to support investment readiness. We're looking at all the regulation that affects this market to see whether we can make it easier. We've even got the Treasury to look at tax incentives. And we are critically opening up new opportunities that could be financed. So new opportunities to deliver public services for charities and social enterprises, new opportunities for communities and community groups to take over assets and buildings and services, and all of which can be financed, all of which may need to be financed. And that's why we want the social investment market to be there, to be big, to be ready and responsive to meet that need.
If we've learned anything in the last decade, is that the traditional market investments for purely financial returns doesn't work, is not sustainable. If we've seen anything over the last 10 years, we know that charities and social enterprise funding is under extreme pressure, and that's only going to get worse. However, on the good side, there's lots of investors looking to enter into this space. Now, that could be a city institution, but also importantly, it could be a retail investor, just someone in the street who wants to invest their money into some charity or social enterprise doing good. The opportunity for the marketplace, actually the responsibility of the marketplace, is to make this happen in a long-term, sustainable manner that we can measure and show the impact that we can create together over the next 10 years.